Welcome back to another explainer. Today, we're tearing down the complexity behind a single piece of paper. Well, honestly, usually just a single PDF nowadays, that holds the absolute power to either make or break your business. We're talking about certificates of insurance. Look, whether you're trying to land a massive new client, sign a commercial lease, or just step foot onto a construction site, this document is your literal ticket to entry. The stakes here are immense, and getting this wrong, it's not just an administrative headache, it's a financial time bomb. Over $1.4 million. According to the data, that is the average cost of a single fatal workplace injury. Now, why does that matter to you? Because if you hire a vendor, or if you're a contractor stepping onto a job site, and there's a missing, expired, or incorrectly formatted PDF, the liability for those massive costs can shift entirely onto your business. One simple mistake in your insurance verification process could literally bankrupt a healthy company overnight.
So, let's dive into this. Is your business truly protected, or are you just assuming you're covered? Today, we're going to decode this intimidating bureaucratic task. We'll break down exactly how you request, verify, and read these documents so you can protect your business, secure those massive client contracts, and actually sleep soundly at night knowing your liability is fully covered.
Here's our roadmap for today. We're going to cover what a COI actually is, decode the ACAR 25 form, walk through the application process, troubleshoot common pitfalls, check out some advanced upgrades, and finish up with a rock-solid review and verification checklist. Let's get to work.
Section 1, what is a COI? Let's get our foundational knowledge locked in. The absolute most crucial point here is understanding exactly what this document represents. A certificate of insurance, you'll hear it called a COI all the time, is really just a one-page standardized document. It's issued by an insurance company or an authorized broker, and its entire purpose is to summarize a policy's key details. We're talking about the types of coverage, the financial limits, the effective dates, and the named parties. It basically provides quick, undeniable proof that your coverage is actively in force. It exists so that you can prove you're insured to a client without having to hand over some dense, 100-page legal policy document. But there's a critical distinction we need to make right out of the gate. A certificate of insurance is not the actual policy. I repeat, a COI is not insurance. Think of the COI as a backstage pass, right? While the actual insurance policy is the concert itself. The COI is literally just an informational snapshot of existing coverage at a specific point in time. Our sources stress that a COI doesn't amend, extend, or alter the coverage afforded by the policies in any way. It confers no rights. If there's ever a dispute, the actual full-length policy contract is what governs the outcome, not this one-page summary. Moving to Section 2. Decoding the ACORD 25. This is the industry standard form you're going to see everywhere. Now, the ACORD 25 form looks incredibly daunting at first glance. It is just a wall of tiny text and little boxes. But let's systemize this so you know exactly where to look. Up at the top, you have the producer, that's the issuing broker, and the insured, which must be your exact legal business name. Just below that are the specific insurance carriers providing the policies. Then the center grid. This is the heart of the document detailing your coverages, like commercial general liability, auto liability, and workers' comp, along with their specific financial limits. Down at the bottom, there's the description of operations. That acts as a free-form text box for specific project details or special endorsements. And finally, the certificate holder in the bottom left identifies the client or entity requesting proof of your coverage. You might also spot these NAIC numbers next to the listed insurers. NAIC stands for the National Association of Insurance Commissioners. And these aren't just random administrative serial numbers, they're actually a vital verification tool. You or your client can use these NAIC numbers to validate the financial strength and legitimacy of the insurance companies listed. It's basically how you ensure that the carrier providing your $1 million safety net is actually authorized to do business and, financially stable enough to pay out a claim if disaster strikes. Section 3, the application process. Let's turn this theory into action. So how do you actually get this critical piece of paper into your client's hands? It's a straightforward 4-step chronological process. Step 1, and this is crucial, confirm your client's exact requirements before you do anything else. Read their contract. What are the limits? Do they need special endorsements? Step 2, contact your insurance broker or agent and hand them those exact requirements. Step 3, your broker verifies your coverage against those requirements and generates the COI. And step 4, you or your broker deliver that finalized COI to the certificate holder, your client. The biggest takeaway here, always, always start with the contractual requirements, because if you just guess, you will inevitably have to go back and do this entire process a second time. If you're watching this and starting to feel anxiety about delays or hidden fees, take a breath. Listen at this quote from our sources. Most agents can issue a COI within 24 hours, often the same business day the request is made, at no additional charge. Getting a standard COI is incredibly fast. Most states actually prohibit agencies from charging a separate fee just to generate this PDF. It should really only take a few days or incur extra costs if your client's contract requires you to purchase new specialized policy endorsements that you just don't currently have. Section 4. Troubleshooting common COI pitfalls. Here's how to avoid those annoying roadblocks. And this brilliantly illustrates exactly where things go wrong in the real world. First up, incomplete or missing information. If policy numbers or limits are left blank, the client will instantly reject the COI, which delays your start date. The solution? Just double-check the form the very second your broker sends it. Second, expired coverage dates. If your policy expires midway through a 6-month project, that is an immediate contract breach. You absolutely must renew proactively, and our sources highly recommend setting up a digital tracking system to catch expirations before they even happen. Third, typographical errors. Guys, if your business is an LLC but the COI just lists your personal name, that discrepancy can literally void your protection during a claim. Always ensure your exact legal business names are used. No exceptions. I need to deliver a very firm warning here based on our sources. Watch out for fraud. Only licensed insurers and brokers can issue a valid COI. You absolutely cannot issue or edit your own. If you're short on time and decide to just open a PDF editor to tweak an expiration date or bump up a coverage limit to satisfy a client, you are committing insurance fraud that carries severe legal consequences. On the flip side, if you're the one receiving a COI and the fonts look a bit mismatched or the formatting is strange, that should trigger an immediate phone call directly to the carrier to verify the document's authenticity. Section 5. Advanced upgrades and endorsements. Time for the pro-level tactics for navigating complex contracts. When you start dealing with larger companies or commercial construction contracts, you are frequently going to see a demand for a waiver of subrogation. So what does that actually mean? Well, put simply, subrogation is an insurance company's right to sue the party that caused an accident to get their money back after paying a claim. A waiver of subrogation is an endorsement that prevents your insurance company from suing your business partners to recover those payouts. It's essentially a legal pact to just let the insurance cover the loss, say a burst pipe on a job site, without triggering a massive chain reaction of messy lawsuits between valuable vendor relationships. The second major upgrade you'll see is the demand to be named as an additional insured. This is incredibly common. An additional insured endorsement actually extends your policy coverage to a third party, usually your client or maybe a general contractor. It protects them from liability claims that arise specifically out of the work you are performing for them. They want to know that if someone trips over your equipment on their property and sues, your insurance is going to step in to defend them, keeping their own insurance totally untouched. So the absolutely crucial point regarding these advanced upgrades is captured brilliantly in this quote from our sources. Being listed as a certificate holder buys you nothing. Only the actual additional insured endorsement does, so pull the endorsement and read it. Do not fall into the trap of thinking that just typing someone's name in the certificate holder box, the bottom of the ACOR 25, magically gives them coverage. It doesn't. A checkbox or a typed note on a COI is legally meaningless without the actual endorsement physically attached to the master policy. Section 6. Review, Verification, and Ethics. Let's run through the tools for flawless execution. Before you ever send a COI to a client or accept one from a vendor you've hired, I want you to run through this highly actionable final verification checklist. Number 1. Do the coverage limits match the contract down to the exact dollar? Number 2. Are the policy dates active for the entire timeline of the project? And if not, is there a robust system in place to get a renewal certificate later? Number 3. Are the required endorsements, like additional insured, actually attached to the policy, not just typed in the description box? And number 4, is the certificate holder's legal name spelled perfectly? Check these 4 boxes every single time, and you ensure airtight compliance. Now, as we wrap up this explainer, it's vital to impartially state this professional disclaimer. A certificate of insurance is only a summary. The information we've explored today provides an educational blueprint to help you understand the mechanics of the ACOR-25 and the application process. However, this is not binding legal or insurance advice. You should always consult with a licensed insurance professional or broker for specific, tailored advice regarding your unique business coverage and contractual risks. Let me leave you with this final, provocative question. Are you willing to bet your next multi-million-dollar contract or even the very survival of your business on a single, unverified PDF? Now that you understand the mechanics of a COI, the layout of the ACOR-25, and the immense risks of expired dates and missing endorsements, you have the power to take control. Go audit your own insurance practices immediately, verify those documents, and step into your next big business deal with absolute confidence. Thank you so much for joining me for this explainer, and keep learning.